Good evening, everyone. Good evening from sunny California. Before we dive straight into this topic, I'd like to understand how we got here and why is this pertinent to the whole world of computation and specifically artificial intelligence. In year 1861, a company called Western Union pulled the first telegraphic line between the two coasts of the United States. 10 years later, they started the first telegraphic transfer service, meaning they could wire money from one account to another, from one person to another, using their correspondent offices, using the telegraphic line. From that moment on, the revolution in digital assets and in financial technology was officially started. We are here today with a lot of iterations and after a lot of improvements. Today, we are assisting an exponential growth in the way that money is moved around the world and the way people are empowered to grow their lives, grow their businesses because of all this innovation. Specifically, we came to the point where even governments are considering adopting digital currency as their sovereign money. This is very important because it will enable a lot of economic growth and a lot of opportunities for everyone in a democratized way. More specifically, in the latest few decades, we've assisted mobile payments, near-field communication protocols for wireless contactless payments, and very democratized access to technology in the form of smartphones. All this has contributed to get to where we are. The next steps are going to be fundamental to shape the world of the 21st century. This chart illustrates, it was redacted by the Bank of International Settlements in 2018, and illustrates how money is identified. There's various types of money, of course, and central bank digital money is just part of it, and even central bank issued money can be under several forms. The one that is most talked about these days, so the one that is meant to be straight in the hands of the citizens, is highlighted in gray. And specifically, Tangem, the company where I serve as CEO, has been working on a way to democratize access to this central bank digital currency. To give you a little more of a background and understanding on central bank digital currency, there's a lot of debate going on whether it should be an account-based or a token-based solution. I find this debate not necessarily well-based, because if you consider money depending on a technology platform, you miss the point of product design. A product should be designed for their users, their applications, and their intended experience, not based on the platform capability. We are now in 2020, we have achieved an evolution in technology to the point where we shape the products based on what the needs of the users are. It shouldn't be the other way around. So with Tangem, with my company, we have developed a whole solution of technology, a whole stack of technology that goes all the way down from the chip manufacturing up to a mobile software and connectivity into various blockchains to make available to billions of people the capability to transact, hold digital assets. The trickiest and most difficult challenge of central bank digital currency is trying to replicate the success of paper cash, which is a very interesting user experience. It's very private, it's physical, it's instantly settled, it's final, and it's directly issued by the central banks. There's also a big debate on whether the distribution of central bank digital currency should be intermediated by commercial banks. It's called a two-tier system. And that also, in my opinion, is an important debate, but doesn't really address the main concern, which is how are people going to use a central bank digital currency in the future? What do they really need? What people need today is the best of our mobile payment apps that we're all getting used to, like, well, in the US would be Venmo, but every country has their most successful mobile wallets, and combine it with the most successful applications of paper cash, which is clearly offline. It's complemental to the digital world. So these type of charts, where this type of tables where a neat line is drawn between token and account-based scenarios, should probably be rewritten with a blurred line that identifies not the technology, but rather the user experience that we want. Going back to our progress in time, it's important to understand that we are assisting a revolution for finance and for digital money that is as important as the revolution that happened in the 1880s for electricity. For those of you who are familiar with the War of the Currents, this will ring a bell. In 1880, Nikola Tesla was fighting for democratizing access to alternated current, whereas his archenemy Edison was fighting to distribute instead direct current. Well, the winner was eventually alternating current, and the reason being is that alternating current can be transported much further, much more efficiently, and it can be transformed at the destination for a local smaller community or subnetwork with another important tool called the transformer. So the combination of alternating current and the transformer made it possible to democratize access to electric power in a very short span of time. In a few years, literally, entire cities started to get covered with electric connection. So mainstream adoption is something that requires powerful technologies combined and stacked together. Today, we're at the point where asymmetric cryptography, which is a property of, which is a type of cryptography that uses mathematical properties to disintermediate the means of conversation, the communication channel, and make sure that privacy and obfuscation of a message can be achieved even when the payload, the cipher, is transferred in plain sight. For those of you, again, who are familiar with blockchains, you must understand that this is the foundational block of any modern blockchain system. The classic example, well, you have Alice and Bob, and Alice only shares the public key, and they all keep their private keys to themselves in order to sign a ciphered message transfer between each other. This is a way that assets are claimed on blockchain-based systems, where an asset owner, a wallet owner, will keep his or her private key to themselves, unless, of course, they decide to keep those assets in custody with a financial institution. What role do we play today here as Tangem? We are the equivalent of the transformer to the modern world of blockchains and asymmetric cryptography. If you want digital assets to be available and democratized for mainstream adoption, we need a tool that allows for these private keys to be handled by the large majority of the world population without going through the trouble of getting a doctorate in cryptography. So we have devised a very interesting stack that is based on a chip solution, a firmware that is proprietary and audited, open source mobile software, and interoperability to any type of digital ledger, including blockchains, of course, which we are big fans of. What we've achieved here is fundamental importance to understand the future of money. Blockchains, specifically Bitcoin, already made great strides to teach mankind the importance of privacy, self-sovereignty, and trustlessness. A system where the trust of all the intermediate parties is limited or eliminated, by nature works so much better. It's more efficient, it's less prone to attacks. So the attack surface of the whole system is greatly reduced. If we want to abstract this concept, what we're doing really is shifting the trust to the edges of the system. The private key holder and the digital ledger are where the trust should be, not any intermediate point. We applied this philosophy to the world of finance and to the world of digital assets in general. And by digital assets, I don't only mean money, but I also mean credentials, identity, authenticity proofs, and everything in between. In order to achieve this type of solution, we had to work hard for about a decade and invest quite some resources in developing the foundational base of the solution. We had our firmware audited by Kudelski Security. For those of you who are familiar with cryptography, the name Jean-Pierre Omasson may ring a bell, and he personally audited our firmware. A firmware that has one simple goal, which is to keep the private keys safe, secure, and private. Never have the private key leak out of an embedded card-based solution. Cards look like this. It's very simple, and that's the whole point. Simplicity is the key for mainstream adoption of digital assets. And to further reiterate on the point of simplicity, I can also show you how easy it is and it must be to handle digital assets. This is a mobile app which is available with open source libraries. So any developer can replicate our Tangem app. This is just a reference design to show how the solution works. If I want to scan a card, I just need to tap it on the back of the phone, and via near field communication, the phone will ask the card to prove ownership of the private keys, and we'll go check on the digital ledger what is the balance of this wallet. In this case, it's a Bitcoin wallet with 0.01, equivalent to $20 of Bitcoin. Bitcoin is an example, of course. Our cards work with multiple currencies, and you can find them on tangem.com and shop.tangem.com. The cryptocurrency cards are a demonstration to explain how easy it should be for digital assets to go mainstream. And by digital assets, as I mentioned before, we can also have anti-counterfeit. For example, New Balance had a beautiful project where this Tangem card is a title of ownership that is blockchain anchored for authenticity of their collectible products. Back to our stack. The trust has to be shifted to the edges. So at the edge, we have a firmware that is audited, and we have hardware platform, which is based on secure elements. Today, we're using off-the-shelf EAL6+ chips. We're also designing our own chip, and we can port the solution to any type of Java card-based platform. The point is that you'll have an auditor or a certifying agency to make sure that the hardware is safe. At that point, in order to interact with this hardware, with these cards or tags, we need a smartphone. We need a smartphone using NFC. And on that smartphone, anyone can safely and transparently go on github.com/tangem, pull the open source libraries that are necessary to communicate with the Tangem card, transparently see what goes on there, what a mobile app requests to the Tangem card in order to obtain transaction information. And everything on top of there is purely and transparently anchored to the open source philosophy. Supporting all sorts of signature schemes like SecP 256K1 and Edwards curves, so AD 25519. We can obviously support all the most modern blockchains and digital ledgers in general. So what we really want to achieve here is a very easy experience for a very complicated and sophisticated type of asset. And this opens up, obviously, a whole new market, the market of people that don't have a smartphone, don't want to have a smartphone, cannot have internet connectivity or electricity. And just by holding a card, they have the power of a HSM, a hardware security module, so a very computational intensive processing unit with a connection to a digital asset. They don't need to learn all the trickery that is required to safely handle digital assets without a custodian. Just to clarify, holding a digital asset can be achieved two ways. Either you delegate the holding part to a custodian, so the asset is in custody by an institution or a company. This is what traditionally happens with bank accounts, where the money is safely and kept by the bank. Or alternatively, and with digital assets, this is particularly powerful, a holder can keep the assets by means of safekeeping a private key or multiple private keys. Safekeeping a private key is not always easy because of the complexity of cryptography. Especially smartphones today give us the impression of being very secure, but really what happens is that we have a semi-secure authentication system like Touch ID or some other biometric functions. But anything beyond that then is left up to how the operating system allows apps to interact with each other, and with the shared storage, which is non-secure. And generally speaking, it's hard to access secure elements within phones if they're available at all. So really, smartphones should not be used to keep private keys on an app-based scenario. And that's what we've done here. We've decoupled, we've separated the smartphone from the private keys, where we basically took a wallet, we split it in two, and the juicy part, the private keys, live in the card. They're generated in here, they stay here, they're used to sign transactions, they never leave the card. Whereas the phone only is left with the purpose of showing an interface that doesn't bear title to the assets. And this is where it gets interesting. By the way, feel free, anyone, to interrupt me anytime. I really like to have live questions. So anyone has the possibility to unmute and just ask a question. Programmable money is the present and the future. The case is strong for having situations where money is now starting to be considered, and digital assets. I interchangeably use money and digital assets, although digital assets is a more broadly defining term. Digital assets should be considered objects that are programmable and therefore easily adapted to various situations, distributed through digital channels and accessed by billions of people instantly. But this is only possible if those billions of people have a secure and democratized and fast way to claim those assets, to transfer them, and to use them. And this is our mission at Tangem, is to democratize access to digital assets. We want to be a universal portal without discriminating barriers to entry. So we achieved scalability that is second to none, where our digital wallets can compete in price with paper money, and a scale where a government needs to bank hundreds of millions of people with digital assets wallets. The levels to which digital assets and money can be programmed is mind-blowing. Today, we're stuck with the choice, or at least yesterday, we were stuck with the choice of paper cash or mobile bank account or mobile banking or digital bank or bank in general, with a clear line separating the two in terms of privacy, behavior, trackability, KYC, acceptance, transferability. So there was really no intermediate choice. It was a binary choice. Today we have unlocked all the gray area in the middle, all the intermediary solutions. So now we can have programmable privacy. We can choose as a product designer, as a bank, as an institution, as a mobile wallet company, as a asset issuer, as an identity company, as a government. We can choose how do we exactly want to fine-tune the level of privacy in various steps of constituents' daily life, and then use that product design dogma to shape the user experience. Accountability is also programmable at this point. In the past, you'd only have an institution that is licensed and that had to go through a lot of institutional upgrades in order to be able to handle money and to handle digital assets or assets, let's say. Well, today, the barriers to entry in order to handle digital assets and broker them and issue them are very low, of course, to all extremes. We've all seen what happened with the ICO bubble a few years ago, and frankly, it's happening again with DeFi today to a certain extent. But that's good. That's innovation. That is exactly what we need to test the waters, to test the edges of the 21st century of digital assets. The whole point is that we have programmable accountability where digitally the trust can be shifted to various parts and edges of the spectrum within a line of code. And that's so powerful. That is powerful, and that's exactly where artificial intelligence comes in. Because artificial intelligence combined with paper cash can't really do much. There's no interface. Whereas artificial intelligence with digital assets, where those digital assets are in the hand of billions of people, then you have an interface, an API, let's call it, an API for money. So I'll give you a broader panorama of various type of payment solutions and digital assets transfer solutions, what can be achieved with Tangem and without Tangem, and then I'd like to open the floor for questions. So I see that there's already a question from Majid.
Yes. Yes, continue, please.
Okay. The world today is mostly running on two types of payment network. Payment networks can be open loop and closed loop. What you see in this chart is a closed loop network where digital asset ledger and maintainer of the ledger is central to the whole behavior of the network. Think about your mobile money apps like M-Pesa or like Venmo or PayPal. What happens is that anyone needs an account, any endpoint that wants to transact on the network, hold assets, send assets, receive assets, needs an account with or without KYC, and it can at that point transact. So every transaction has to go through the central ledger directly with a one-hop scenario. Whereas with open loop networks, what happens is that you have a routing capability where payment or request for payment doesn't necessarily go straight to the ultimate ledger, but may be routed through different players or parties. So you have the possibility to open up the network to exponentially more endpoints, which is very valuable by network effect. But you increase complexity by need of strong governance platforms and regulations. And this is how the payment network operators work. So Visa, MasterCard, UnionPay, and also some domestic networks, they all work with this principle of four-party or multi-party system. So what we achieved with Tangem is to blend the blur the lines between these two type of networks, or rails, as finance people call them, and allow a single instrument, which can come in form of a tangent card or a tangent note. A single instrument can switch between various networks using either deep cryptographic properties of private and public keys, or switching to the more traditional certified Visa, MasterCard applications. And this is the ultimate power, because you can transport that money interface that is the key to programmable money for a global acceptance, for a solution where it can be used anywhere. Digital assets are useful if they're accepted and if they're usable. So if you don't have UX and merchant and peer acceptability, unfortunately, there's no benefit and no value to the end user. So what we've really done is have a Swiss Army knife for mainstream adoption of digital assets, and also specifically central bank digital currency, that is programmable, as we said, allows for any sort of policy, monetary policy, privacy policy, commercial policy to be implemented on top as a software layer. But this is a big revolution here. In the 20th century, the monetary policy of cash was physically implemented by printing the cash. Now, with central bank digital currency and with digital assets that are cryptographically secured, those policies are implemented by lines of software and lines of code. This blows my mind every day, every single day. At Tangent specifically, we have an array of solutions that range from multi-signatory wallets for securing large sum of assets, or for spreading the ownership between multiple institutions or people. We have institutional accounts and central banks that are already using our card-based wallets for authorizing real-time gross settlement payments. We are also entering the world of identity with credential wallet, which is the same technology but adapted to conform to the W3C standards of self-sovereign identity, and basically enable very interoperable system where issuers of credentials, verifiers of credentials, and holders of credential can freely interoperate with an open protocol that is equivalent to HTTP for the web. So this is going to make a big impact on the world in the future. Now I really want to hear some questions.
Yes, thank you for your excellent presentation. I have some points just to raise it for you through your speech. One is related to the blockchain technology, and second, for the security, as you mentioned, is the biggest issue. And then you said that cryptology is secured. So this is how come with cryptology is secured, and then you mentioned that it is the biggest issue is the security. Third, about the digital currencies, and the digital currency that is the national currency, and the other currencies that is traded like the blockchain, the Bitcoin, and others. So I just want to mention all these things because you start your workshop mentioning the company, which is the Western Union, to transfer the money. So regarding the blockchain, we know that this very excellent technology, that there is no intermediate between the two partners, the sender and the acceptance. So that will save a lot of money. But the issue of the security, is it 100% or not? This is an issue, and you mentioned that is an issue. This is first. Second, regarding the currencies like the blockchain, and I think Facebook, they mentioned one currency and so on, which is not a national currency that is accepted and issued by the official regularities who are responsible to issue the currency. And the idea goes back to 2008. There is an article, has been at 31 of October 2008. A research paper has been titled Bitcoin, an organized electronic payment based on the principles of one-to-one. So which means that they said, or that they conclude, there is a person called Satoshi Nakamoto. We don't know if this is a real one or people together or what, but it's not a real one. They said that the basis of the traditional currency is how much is the trust to be successful, that the central bank has to be trusted that this value of the currency is not depreciated. And in the history of all the currencies, there's a lot of examples that this trust has been violated. So the banks has to be trusted when they reserve our money in the banks, and to transfer it electronic. So this is all the idea behind this currency. Now the monetary system in the world is based on national currencies and going back to the currencies or the hard currencies that can be transferable. So this is the idea. I want you to comment on that, about these currencies like Bitcoin and others. Is it reliable on the digital era? This is one thing. The blockchain itself, is the security is secure 100% with the cryptology? This is my second question. Thank you.
Thank you. Thank you for the question. So I'll break it apart in a few smaller concepts. Let's start from security, which of course it's very much at heart in my daily life. Security is as strong as its weakest link. So, especially when it comes to digital security, everything moves very fast. And when you talk about security, you of course have to understand what an adversary and let's say an attacker would want to, could do, or would want to try to do to take advantage of a vulnerability or an attack surface and compromise the system. As you said, blockchains or digital money is secure because of asymmetric cryptography. So the weakest link in most of the blockchain or digital money solutions where there's no custody, so where there's no banking institution in custody involved. So now we're talking about the case where holders keep their assets in their own hands. This is the case we're talking about now. And the weakest link in all those solutions usually is safekeeping of the private key. So unfortunately, by design, in order to disintermediate the trust that we need to put in the system, in order to make sure that all the communication line between the holder and the receiver or the ledger is safe, we have to push all the responsibility of keeping the private keys secure to the holder. And this is why it's critical. And we are solving at Tangem exactly this problem. How do we make sure that mainstream population, billions of people without any education in cryptography, are able to keep these private keys safe. So our solution is to make sure that the private keys cannot be taken out of a card. That's the only way. And as I can quote one of my favorite authors, George Orwell, in the book 1948, wrote, "If you want to keep a secret, you must also hide it from yourself." That's the only way a normal person that is not educated about security can keep something secure, is by not having access to it, although having physical possession. So keeping physical possession and keeping physically keeping something physically secure is much easier and much more understandable than having to deal with hardcore cryptography and encryption. So, and this goes hand in hand with the second question you asked, which started broadly from the concept of a non-sovereign currency, but ultimately ended up identifying the real essence of the problem, which is, who do we trust? And again, technology doesn't solve trust. Technology allows to program the trust path. So technology, and specifically we're talking about blockchains and asymmetric cryptography, allow to shape a scenario where all the trust is pushed to the edges. A user has to trust their ability to keep the private key safe, and so we have the tangible solution where the key is safe in a physical instrument, and therefore it's hard to compromise, really, even intentionally. And on the other hand, you have the trust of the asset issuer. Do we trust the Bitcoin network, or do we trust the central bank? Well, I cannot answer for that because it's a very personal thing. Also, governments have been and central banks have been clearly making mistakes in the past, but at the same time, they kept things together for a few centuries. So there's pros and cons. It's an endless debate. What I think it's important to understand about Bitcoin is that it's an amazing proof of concept. It showed that all of a sudden we can disintermediate the whole heavy part of the financial system and go straight to the source, the asset issuer. In the case of the Bitcoin network, it's a distributed network with no owner. So the issuer is really only the miners and the proof of work. That's where most of the trust lays today.
Yeah, but it is allowed in some countries and it's banned in other countries. In Saudi Arabia, it is banned by law. In the United States, in Germany, and other countries, is allowed. And even it is not issued by a sovereign law. So how come this works? Well,
so there's a lot of nuances to how an asset is defined, whether it's a commodity, a currency, a property. So the countries that have decided to regulate strongly and even ban the use and transactions of Bitcoin are basically deciding that they don't want consumers to have access to an asset class that is not fully regulatable, it is not fully manageable. So of course there's protectionist measures in place, but I think that fundamentally the role of a government is to protect consumers and users and citizens from situations that can quickly escalate into being harmful. And again, Bitcoin is powerful.
How can they protect the customers, the government? I'm talking from a theoretical point of view. If they cannot control the inflation is in the hands of the governments. So this is very basic question.
I know I'm not here to defend government policies.
Now $100,000 or real, or what you call it, 1980, and this 2020, this $100,000 equals in purchasing power $10,000. That's inflation. So
I'm aware.
That's the logic behind it.
I'm aware. I now live in the US, and I've seen all the checks going out. I've seen firsthand what printing $3 trillion dollars means. Yeah, I get it. Sorry, I'm not a representative of a central bank, so I'm not here to defend central banks. I can only talk for the technology perspective and what technology can empower to do. So now we are having
from the security point of view.
Yeah,
this is the technology part. So how you are sure 100% secured the transactions in the cyber space. We have a cyberspace, and we have we call it info space. And in the info space, there is nothing, nobody can give you, or nobody service provider give you a guarantee 100% security. So this is a technology. It's nothing to do with monetary system or something. And that's a big issue. If you have a virus, then all your system is shut down. Either if you are in the hospital and intensive care unit, all your equipment is shut down. So that's a big issue. The banks, if this shut down with a virus, all the data is lost. So it's a big issue.
Yeah, this is a very broad question, and I'm very happy to address it. Maybe in a separate, we can organize a one-to-one call. But generally speaking, security is, as I said, it's as strong as its weakest link. Now, if we're talking about digital asset chain of ownership and transfer security, then we're talking about the specific use of asymmetric cryptography to transact, and potentially about some consensus mechanisms. If we're talking about viruses and IT infrastructure, then of course the conversation can be endless, because because there's so many variables at play. But generally speaking, I think if we want to abstract in one single statement, is that it is hard to keep things safe digitally, mostly because things move very quickly, and there's a lot of attack surfaces that can come up really everywhere. And so it is important, again, to push all the trust to the edges, so that any intermediate play is minimized in the risk that it can bring to the system. And second, that the users can access strong cryptography without having to go through education. Since you brought up the case with viruses in hospitals, most of the attacks are usually social engineered and brought over by phishing. So it really boils down to the weakness of every single user of the system in knowing what an attacker would do. And the least we rely on passwords and old type of authentication, the more we can prevent those situations to appear again. And therefore, that's why at Tangem we decided to have a solution where the user is not able to see the secrets, to see the private keys, because he or she cannot be socially engineered to reveal those keys if he cannot or she cannot extract them from a token. Look at, for example, authentication products like YubiKeys or RSA keys. The whole point is that you touch it, you insert it in a computer, but if you don't have physical ownership, then you can't mess it up.
May I summarize it in a very simple way? Mm-hmm. Since the start of the civilizations, 12,000 years back, all the humanity is living in the biosphere. And nowadays, all the humanity in the infosphere. And that the infosphere is totally different from the biosphere. And all the activities now is translated to the infosphere with what they call it, the digital transformation. And there is a big risk in the infosphere, from the financial part, from the medical part, and so on. So this is my main concern. Thank you.
Thank you for your observations. They're very, very interesting, and there's definitely room for a lot of more deeper conversations about the role of security and cryptography in the world of digital. yes, it's not easy to do it right. I agree with you. Absolutely.
Thank you.
The floor is open for more questions. If anyone has doubts, concerns, hopes, or curiosity driven by my presentation.
Well, thank you very much, Sergio, for your presentation. It's really nice. Of course, I do understand the risk and the opportunities available with blockchain. And what you have introduced is really interesting. And probably when it comes to the ledger and the edge and other things, of course, I think it's state of the art for the time being. We are very interested to learn more about what you're doing in your company and to cooperate with you in the future. Thank you very much.
Thank you very much, Fatma, for having me here today. It was a pleasure. You have a very interesting audience. And if anyone wants to reach out to Tangem, our website is tangem.com. And you can also reach directly to me, Sergio, SERGIO, @tangem.com. Thank you very much.